Hi everyone, this is Paresh Desai from Sankalp Eduventture, and today we are going to see how to use the Zerodha platform in taking the trades for futures and options. So if you like this video, please don't forget to subscribe this. You can also share this with your friends, and if you got any other suggestions, if you would like to know something more about technical analysis or stocks, please don't forget to put it in the comment box below. So let us start in understanding that how you can take the trades by using the Zerodha platform for futures and options. So the chart which you see here right now is in the site of Zerodha. It's a discount broker in India, one of the largest broker house in India, and that's the reason why I am taking it in this platform. So if you want to take a futures trade, right, and I'm just assuming that you want to let us take a futures trade in State Bank of India. So what you can do is you can go over here. Once you are inside this platform, you will find that there are these numbers 1 2 3 4 5. These are just watch lists, and these are some watch lists we have already loaded, preloaded, which I have preloaded earlier. Now if you want to take a trade, either it has to be in this watch list which you would have added earlier, or if it is not there in the watch list, you can always add it here by putting it in the search part over here. So I say SBI and futures. Okay, so the moment I say SBI futures, can you see SBI in July, August and September? So there are 3 monthly contracts which are available for the futures trade. Let us say I want to trade for the July futures of State Bank of India. I'll have to go on this blue icon which says B, which is for buy. Once I say buy, then this window will open. Now in the buy, I've got option whether I want to take as an intraday or if I want to take an overnight. Now if I'm taking intraday, then this cover order will also be applicable. Okay, but I'm taking only the overnight trade right now. So for an overnight trade, now you see that 1500 is already given as the quantity. So one lot of SBI in the futures is 1500 shares. Now if you look here at the bottom, the margin required is 2,24,755. Yes, as we all know that for the futures trade you require to keep a margin. Now if you take 1500 by 429, it will be a huge figure, right? But the margin normally is somewhere around 15% to 25% of the entire exposure. So you need not have the full value in the loaded in your account. You can have something little bit more than 2,24,000, something like 2,25,000 or 2,30,000 is also fine. So as long as this much money is there loaded in your funds, you can take this trade. Now if you don't have any funds loaded in your account, you'll have to go here into the funds and say add funds. So by adding funds, it will get linked to your savings account which you have given at the time of registration, and then the money will be loaded into this account. So once you have loaded the funds in your account, it is more than 2,25,000, you can take a trade for overnight. Let us see how to take a trade on overnight trades. So what you see here, one is market and one is limit. Okay, so right now the price which is going on, it's a live market, it is going up 428.9. It is right now it's showing 430, right? So if you want to buy, let us say trade for SBI futures. Now let me take the SBI futures chart also. So if I take SBI futures chart, then you'll be able to see the SBI futures chart which is here at the bottom for July. Yes, can you see it is 429, and if I want to buy it, I go on this buy icon and simultaneously I can see the chart as well as the buy window. So once this window is open, I can decide when I want to buy. For example, if I have decided yes that probably I want to buy it comes at the double bottom, and I could have selected something like that 425 or something. Okay, so assuming that I am expecting the price might come one more time to this level 425, and that's what I can do by selecting here as this one is for SBI This is for SBI futures. Let me take let me take it for SBI futures. Okay, so SBI futures is over here, which is at 429.5. Now if I want to buy somewhere around 425, right now it is 429, what I can do is I can select it here as 425. So when the price comes here to 425, that is the time my order is going to get executed. And you have to take care that you have to have at least 2,24,527 rupees 0.50 paisa in your account. Only then this trade will get executed. Once you select buy, what will happen that this order will go through the broker into the exchange, and this order you can see in the order menu over here. After clicking the buy, the order gets into the exchange. Okay, it gets lodged into the exchange, and if the order has got executed or not, you will be able to find it over here. So after putting the order, you can go into the orders, which is a good habit to see whether the order has actually been placed or not. So go into the orders menu and see whether you can see this order. Okay, so if this order has been placed properly, then you will find that it will be showing you yes that you have ordered for one lot of 1500 shares of State Bank of India futures, and the price which you want is at 425, and whether it has been executed or it is pending. Right now if you see that the price is 429, and since we have placed 425 as the price, the order will show as pending. It will not be executed. After it reaches 425 and the trade gets executed, then the order status will change. It will show as executed, and once it is executed, it is going to come and in your positions. So till that time the order is not executed, it will not come into the position. So you understand there are two parts. One is putting the order, and if you're putting it as limit order, then that order until it gets executed, it is not going to come into the positions. Now another option is, let's say you think that the price may not come to 425 and you want that you think that the price is going to go up from here. Then what you can do is you can select it as market. Once you select market, and if you say click on the buy icon over here, whatever is the next best price which the seller is giving, that price is going to be taken as your order price, right? And the order will be getting executed immediately. There won't be much delay. Okay, wherever is the next seller, since you are buying, you need a seller. So wherever is the next seller, your order will get executed. Okay, so one more time, after putting that order, go into the orders, check whether that order is executed. If it is executed, it is going to show in your positions. So this is how you can take a futures trade in any stock in Zerodha. Now similarly you can take for indices like Nifty, Bank Nifty and Fin Nifty. Let us say you want to buy a Nifty futures. So go to Nifty futures. If you go to Nifty futures, again you'll find that there are 3 contracts, July, August, September. You can select a Nifty futures, and once you select Nifty futures, the Nifty futures lot is of 50 shares. Okay, so same thing, you can buy it market or you can buy it at limit. The margin required right now is 1,04,700 odd, and as long as you got more than this amount in your account loaded, you can buy this trade. Now how do we exit from this? Okay, so you'll need to exit this also when the trade reaches your target or when that reaches your stop loss. So let us see how to execute that one too. So if you have bought a trade here, if you bought a futures contract, then you need to go in your positions, and in the position it will be showing you as a long contract. That means you have bought that contract. So go into that contract and select, or there will be 3 dots, select exit over there. Once you select exit, what will happen is a sell window will open, because now you are trying to square off. Earlier you had bought, now you are selling it off. So while selling also, it is going to ask you 2 things, whether you want to sell at market price or you want to sell it at limit price. If the price, let's say, is 430, and if you think that you want to sell it at a little higher price, you can keep the price as, let us say, 430. And if you sell this as a limit, what will happen is the order will get launched into the system. You can check it out in the orders one more time, and when this price comes, if you see it will just come. So if 430 comes, then that trade would have got executed. Now again, similar thing, if you put a market order, what's going to happen is, let's say you put a market order, whatever is the next best price, the trade will get executed. So this is how you can enter into the trade and exit also from the trade in the futures. Now one more advantage which you get in the futures is, which you don't get in the equity, is you can short the market. So let's say if you find that this market is bearish and you would like to short the market here when it reaches at 431, because let's say you identified a bearish trend and you think that yes, 432 to 431 or 432 could be a resistance and the price might come down from here, you can actually take a short trade too, which is not possible in the futures. So once again you go into the State Bank of India futures, but this time the order is going to be reversed because you're going to take a short trade. So if you're taking a short trade, you're going to sell first. Okay, so your first stage is going to be sell. In your long trade, it was the normal way that you buy first and you sell later on. In a short trade, what you do is you sell first and then buy later on. So if you are bearish and if you think that the price is going to come down, what you're going to do is you're going to sell first. So click on the sell item. Once you sell, then once you open the sell window, and if you decided that I will sell when the price reaches 430 and I don't expect that the price to go beyond 430, 431, and after that there could be a fall, and 431 is, let us say, I'm assuming let us take 432. So if you think that you want to sell at 432, what you can do is you put a 432 sell order. So if you have decided that 432 is the price you want to short the market, so you can put a limit order and press the sell sign. Again, this order is going to go in the orders menu, where you can check whether the order is actually been placed or not. When 432 reaches, the trade will get executed and you will be in a short position. That means you would have shorted the market. Now if you have shorted the market and the price starts falling from there, you will actually be in profit. If the price starts going up from there, you will be in loss, which is a normal scenario which everyone knows. That if you have bought and the price goes up, you make a profit. If you are in the selling position, that is if you are short and if the price goes up, you will be in the loss. If you have sold and the price comes down, you will be in a profit. So one way is you can make a limit order. Now if you think that the price is not going to go up to 432, let me sell over here itself. So you can put a market order also. So whatever is the next market price, you will get that price as a short sell. So once you put this order, again go into the orders and see whether the order has been first placed properly, and if that price has already been reached, then you will find that it will be executed. If it is executed, then it is going to come in your positions. Okay, in the position it is going to show as a short position. Why? Because you have taken the first step as sell, and now if you think that the price is going to come down, and if it actually does, and let us say it goes back to 425, now you want to make some profits and book your profits over there, you can square off the trade by one more time going into the positions. Once you go into the position, what will happen is you will find what are the position. You'll be in a short position for State Bank of India futures. Click on the three dots and click exit over there. Once you click exit, the buy window will open. Okay, so if I go for SBI futures buy window is going to open, which is be this. So why the blue window will open? You have to understand that you have first sold, that means you have shorted the market. Now if you want to square off from that, if you want to exit from that trade, you will have to take an opposite action. That means you'll have to buy this contract back. So assuming that if the price comes down at, let us say, 425 and you want to exit immediately, what you can do is select market and say buy, and if the price is at 425, the trade will get executed automatically. It is going to show first in your orders. It will show as yes, first you sold it at 430 over here or 432 as applicable, and then when it came to 425, you have squared it off. So you made 5 rupees into 1500 for that particular trade. So this is how you can take a short trade. Now another option, again as I said, you could also take a limit price. For example, 425 is not yet come and you are finding that it has come to 426, and you think, oh, I think the price is going to go 1 more rupee down. So you can put a limit price saying yes, I want to sell it at 425. So once you say that I want to put it for 425 and put a buy, that order is going to go in the orders section and it will remain there until it is executed. It will get executed only when the price reaches that level. Okay, so this was how you can take a long trade and how you can take a short trade too in a futures contract. Now one more thing what you would have observed here would be a stop loss and stop loss market. So let us understand what is the stop loss and stop loss market. Assuming that you had bought at 425, okay, you had bought it at 425. Now the price is going up. So in your position, it would be showing as a long position and you will be in MTM profit of approximately 4 or 5 rupees. Now you don't want to take a chance and you say that what if the price comes down and if it drops suddenly, then I might lose the profit which I've already made, and you want to keep a, let us say, a stop loss of 428 based on what your technical or whatever reasons which you find that you decide yes, 428 is the stop loss. I've already made a profit from 429 to 425 to 430, and if I think that if the price goes below 428, my profits will reduce, and now I would like to keep a stop loss for this. So you can do that too. So once again, going to the positions where it will be a long position. In the long position, click exit. Once you click exit, again what's going to happen is, because you have taken a long position, now you will find a short position over here, and in the short position you will have to go in the sell window will open. Okay, so you bought it at 425, already the price is somewhere like 429.6. now you'd like to protect your profit. So you put one way of protecting your profit is you put a stop loss order. So for stop loss order, if you put, let us say, 428.5 as your trigger price, so as soon as price comes to 428.5, the trade will get triggered. Okay, need not mean executed, you'll get triggered, and then you have to give another price, which this you can put it as 428. So if the price comes down from 429 to 428.5, the order will get triggered, and the best, because you have to selling the best buyer who's there, the trade will get executed somewhere anywhere between 428.5 to 428. So this is how you can do you can keep a stop loss order for protecting your profit. One more thing what you see here is stop loss market. Sometimes if there's a sudden drop, then the price might suddenly drop from 429 to, let us say, 427.5. In that case, what happens? This range does not come inside the price zone, means the price does not cross it, it just jumps below 428. In that case, what happens is that this order might remain unexecuted and your losses might continue or your profits might start reducing. So in that case, there's another better way which you can do is you can select something called as a stop loss market order. So in the stop loss market order, what you do is you just put 428 as your trigger price. So you need to put only one price as a stop loss market price. Let us say around 428. So 428 is the level. If the price goes below that, you want to exit. The moment 428 is reached, the next seller which comes, the trade is going to get exited. So below 428, it could be 428.9 or it could be 428 also. The moment this price triggers and there is a buyer in the same range, the trade will get executed. So this is how you can keep a stop loss and stop loss market order for a long trade. Now, as opposed to that, remember we had taken a short trade also. So in the short trade, we are thinking that the price is at 429, and if it comes down, I am going to make a profit. But what if it goes up? I'm going to go into a loss. Okay, so in a short trade, if you have, let's say, shorted at 429, then in your position you're going to see a short trade. You'll be shorting. Okay, so in the short trade, if the price comes down, you're in profit, but you're not sure that what if the price goes up, then I might be in loss, and I don't want to continue being in loss, and you would like to now put a stop loss order. So for putting a stop loss order, once again go into the position, go into that particular trade, select the exit button over there. Now since you are shorted, the exit means now you have to buy it back. So the window which will open is going to be this one. Okay, because you have shorted and now you want to put a stop loss that if the price goes up, you want to exit is a stop loss order. So while putting the stop loss order, again you have got a choice, either you put a only stop loss or you can put a stop loss market 2. Now see, this is a reverse mechanics. Okay, you have to think opposite of what you are thinking when you are taking the stop loss order for the normal trade. Now if you are looking at the stop loss order for putting on a short trade, understand one thing, that if the price goes up, you will be in loss. So you want to stop that loss. So if the price goes up from, let's say, 429 where you're sold, and if it goes to 430, then you're loss of 1 rupee. It goes to 431, you're in loss of 2 rupees. And you think that if it goes beyond 432, you want to square it off. Right now it is 429. You are expecting the price to come down. That is fine. You'll be in profit. But what if it goes up? You'll be in loss. So that's the reason you want to put a stop loss order. So if you want to put a stop loss order, what you do is over here, the normal trade would be that when the price goes up from 429, 430, 431, so if you're putting a stop loss here, your trigger while going from bottom to up, 431.5 is going to come first, and then 432 is going to come, right? So if you want a 432 rupees as your stop loss, the trigger price in this case has to be little lower than your stop loss price. So you put a trigger price of 431.5. When the price reaches 431.5, it will get triggered, and anywhere between 431.5 and 432, the trade will get executed. Now coming back to the stop loss market, now you don't want to take a chance. What if sudden there's a spurt and the price goes up? You don't want to take a chance. So what you do is you put a stop loss market order. So in stop loss market order, straight away you can put the price of 432 and just say buy, and that order is going to go and remain there in the order menu, right? So there you can check whether the order has been executed or not. Now the most important thing which you have to remember here, guys, please pay attention, that if you have put an order for stop loss, right, and later on when you want to exit from your positions, you can't go in the position and say exit. Why? Because you've already put a stop loss order. So this is one important thing which you have to remember, that if you've already put a stop loss order and now you are in profit or loss and you want to exit, don't go into the positions, because in that case you'll be creating one more order. Why? Because one order which you had put it as stop loss is already there pending in the market. This is most important. Sometimes people make mistake that although they have put a stop loss order, they forget about it and they try squaring off that position from the position menu. Don't do that, guys. Another order, a duplicate order will get placed. So what you have to do is you have to go in the orders section and modify the stop loss order if you have put a stop loss order. So this is an important thing. So please remember to modify the order if you have already put a stop loss order, and then only you can exit. So this was all about taking the futures trade in Zerodha. So what we have discussed, let me quickly summarize. We have seen how to take a long trade, how to take a short trade, how to keep a long trade stop loss, how to keep a long trade short trade also stop loss, right? And the most important, as I said, that if a stop loss order is pending, please go on the orders and there you have to modify the trade if you want to exit. So guys, so we have come to the end of this video. I hope you like this video and this video is of use to you. If you have liked this, please don't forget to press on the subscribe icon. You can share it with your friends, and if you would like to learn more about the technical analysis, then please go on the details which are given below and you can join me for a live webinar. And once you click on that group or the link in the next webinar, live webinar which is there, you will be invited for that. So friends, thank you very much for watching this video. Once again, this is Paresh Desai, Chartered Accountant from Sankalp Eduventture. Thank you very much.